Welcome, curious minds. Today we're taking a deep dive into the latest financial results of Shriram Pistons and Rings Ltd, or SPRL. That's for the first quarter of fiscal year 2026.
Mhm.
And this isn't just about, reviewing numbers. It's really about unraveling a crucial question. How is a company like SPRL, a real backbone in automotive for 5 decades, how are they not just surviving but actually thriving? Especially with these huge shifts from traditional engines to the electric future.
Mm. Yeah, it's a fascinating case. We've pulled together quite a bit for you, the investor presentation, the press release, and also the official board meeting outcome document.
Right.
And our mission really is to pull out the most important nuggets of knowledge, the key insights, to help you cut through all the detail and understand what truly matters in these reports.
Think of this as your shortcut, basically, getting you well informed about a company that seems to be positioning itself very strategically for what's next in mobility.
Yeah.
So let's jump right in then. What does this first quarter, Q1 FY26, what does it look like for Shriram Pistons? How did they kick off the fiscal year?
Well, they certainly started strong. If we look at their consolidated results for the quarter ending June 30, 2025,
Okay.
their total income grew by impressive nearly 15% year over year. That hits close to 10 billion rupees.
Wow. Okay.
And what's maybe even more telling is their consolidated EBITDA, earnings before interest, taxes, depreciation, and amortization. It's a key profitability measure.
Right. Core operations.
That saw an even stronger increase, over 16.5% year over year. And that pushed their margins up to 22.5%.
That's a healthy margin.
Very healthy. And their consolidated profit after tax, the PIT, that grew by just over 15%.
Okay, so those consolidated numbers, clearly robust. But for a company like SPRL, sometimes the standalone business gives a clearer picture of their core, the internal combustion engine side, the ICE operations. How did that segment do?
Good point.
Yeah.
And the standalone performance also showed significant growth, which is really important, like you said, because it underlines the strength of their traditional business.
Mm-hmm.
Standalone total income increased by nearly 10%,
Okay.
and standalone EBITDA was up 12%,
Yeah.
with margins also looking very healthy at 23.5%.
Right.
And their standalone PT, that also grew by 13.5%.
So across the board, really, we're seeing solid double-digit growth. How does this performance stack up against, the broader auto industry, especially with some of the, let's say, challenges we've been hearing about lately?
Yeah, this is where it gets really interesting. Because despite a pretty challenging environment for the auto industry overall in Q1 FY26,
Like what specifically?
well, particularly a 6% drop in sales volume for the high-volume two-wheeler segment, that's significant,
Mm-hmm.
and relatively flat sales elsewhere. Despite that, SPRL consistently outperformed the industry. Exports were definitely a key positive factor, showing growth across all their segments.
Wow.
And the managing director and CEO, they highlighted this. They said their leadership position, strong customer relationships, combined with, resilience and strategic focus.
Yeah.
That's what was crucial to achieving this.
So it suggests their market share or their product mix is holding up really well.
Exactly. It's proving quite resilient.
That really points to more than just, good execution day to day. What's the strategic story driving these results? Are they just riding existing waves, or are they actively trying to shape their future amid all these shifts?
Oh, they are absolutely shaping their future. The core of their strategy seems to be building a really robust business through, well, aggressive diversification,
Right.
and specifically focusing on what they call IC agnostic products.
IC agnostic. Okay.
It's all about de-risking their business model, moving away from just relying on traditional engines. They're actively expanding across different industry segments, product portfolios, customer bases,
Right.
and their FY25 consolidated income already shows this diverse presence. You see ICE powertrains, sure, but also electric vehicles through SPR EMF innovations and these high-precision injection molded components through SPR Takahata and SPR TGPL.
And they've certainly made some, well, pretty significant moves into these new areas through acquisitions, haven't they? Can you walk us through the thinking behind those?
Yes, absolutely. These acquisitions seem very central to that diversification plan. They aren't just random buys.
Right.
First, SPR EMF Innovations. They bought a controlling stake, 66.42% back in January 2023.
Okay.
This is their direct electrification play. They design and make motors and controllers for EVs, a critical step into that supply chain.
Got it. EV components.
Then there's SPR Takahata Precision India. acquired a 62% stake in October 2023. Now, this is interesting because they make high-precision injection molded parts, not just for auto, but for diverse applications like medical equipment.
Ah, so broadening the base beyond auto, too.
Exactly. Plus, they have a technical collaboration with Takahata Japan, bringing in that world-class expertise.
Okay, next.
SPR TGPO Precision Engineering. This was a 100% acquisition in December 2024. This builds on the precision molding side, bringing over 30 years of mold-making experience. You can see the synergy with SPR Takahata there.
Right, complementing each other.
And finally, Karna Intertech, a 100% acquisition just this past April 2025.
Oh.
This one's about backward integration.
How so?
Karna is a key supplier of the gravity die casting molds used in making pistons. So acquiring them helps SPRO control their supply chain and, likely, costs.
Smart, controlling the inputs.
And the MD and CEO actually stated pretty explicitly that these new ventures, the precision molding and the electric motors businesses, are, quote, performing well and providing impetus to our overall growth.
So it's not just talk, it sounds like it's working.
Exactly. It's a strong signal that this big bet on IC-agnostic businesses is really starting to pay off, maybe faster than some expected. It validates the strategy.
That is a powerful validation for that strategy. So, okay, how are they actually driving the innovation side? Preparing for these next-gen mobility solutions, especially on the tech and R&D front.
Well, they have this state-of-the-art technology center. It's recognized by the Department of Scientific and Industrial Research, fully equipped for end-to-end product development, holds multiple patents. They're clearly investing here.
Okay.
They're not just waiting for the future. They're actively developing components for, well, several things.
Like?
Electric vehicles, obviously. That's key.
Mm.
But also ethanol-blended fuel solutions, which aligns directly with India's roadmap for cleaner fuels, right?
Right, the E20 push and beyond.
Exactly.
Mm-hmm.
Also, advanced CNG-compatible components needed for the tighter emission norms.
Okay.
And maybe the most fascinating bit, hydrogen-based fuel solutions.
Hydrogen?
Yeah, things like hydrogen internal combustion engines, H2ICE, and also hydrogen-enriched compressed natural gas, or HCNG.
Oh, wow.
Their stated vision, quite boldly, is to service the last ICE engine globally.
Huh. That's a really interesting dual approach. Pushing into EVs and hydrogen, but also committing to service the last ICE engine. What's the thinking there? Why are they so convinced the internal combustion market will keep growing, especially with the global EV push?
They present a pretty compelling case, I think, particularly tailored to the Indian context.
Mm-hmm.
It's maybe a bit contrarian to the global headlines, but it has its logic.
Okay, what's the argument?
They highlight several pretty significant challenges for widespread EV adoption in India.
Such as?
First, high initial cost. EVs can still be double the cost of a similar ICE vehicle. That's a big barrier for many Indian consumers.
Sure, affordability is key.
Then high replacement costs and a, well, minimal maintenance network.
Mm-hmm.
An EV battery replacement can cost up to 7 lakh rupees. And finding skilled technicians outside major cities, it's tough.
That's a huge cost. Right.
And then there's a charging infrastructure issue, or lack thereof. India currently has something like over 200 EVs for every single commercial charging point.
Wow, 200 to 1.
Compared to maybe 20 in the U.S. and less than 10 in China. So a massive gap, huge hurdle for consumer confidence.
Definitely. Range anxiety is real if you can't easily charge.
And linked to that, insufficient power grid capabilities. They cite a report suggesting, get this, a potential demand of 37,000 gigawatts of electricity if just a third of auto sales are EV by 2030.
37,000 GW, and India's current capacity.
India's 2023 installed capacity was around 412 megawatts. So a colossal difference.
Okay, that puts it in perspective.
So they emphasize, India's demographics, the economic realities, the technological maturity. It's different from the West or China. They suggest a much slower EV adoption curve here.
Which makes their plan to keep servicing ICE make sense.
Exactly. That's why they believe ICE engines will continue to grow alongside the auto industry here for the foreseeable future, making that dual strategy pretty crucial.
That's a very powerful argument for a more, let's say, nuanced transition path in India. And it's also worth circling back to their technology partnerships. Those seem fundamental to their innovation, right?
Absolutely. These aren't just, supplier relationships. They are deep-rooted partnerships. They give access to world-class tech and manufacturing know-how.
Who are the key ones?
Well, they got ties with global majors like Kolben Schmidt from Germany for pistons, going way back to 1972,
Wow, long time.
and Riken Corporation from Japan for rings since 1978. And interestingly, Riken actually holds a significant stake in SPRL, about 21.3%.
So very close relationship there.
Very. They also work with Honda Foundry from Japan for pistons since '89, and Fuji Ooze, also Japan, for engine valves since '93.
Decades of collaboration.
Exactly. And more recently, as we mentioned, the partnership with Takahata from Japan for the high-precision injection molded parts since 2023 following that acquisition. These aren't just names on a slide. They represent decades of shared innovation.
Okay, so they're clearly innovating, hedging their bets on future tech, leveraging partnerships, but all this forward-looking strategy needs a solid operational foundation, right? How are they ensuring their day-to-day operations are lean and effective?
Yeah, you can see their commitment to efficiency and operational excellence,
Yeah.
right, in the financials.
Yeah.
Those EBITDA margins we talked about.
Right. Jumping significantly.
They jumped from 14.5% in FY21 to 23.7% in FY25. That's a big improvement. And it's attributed to several, well, pretty smart measures.
Like what?
Effective resource utilization, for one, implementing affordable, low-cost automation, and interlinking machinery boosting output without massive capital expenditure.
Smart automation.
Increasing capacities through debottlenecking,
Uh-huh.
basically finding and fixing constraints in their production lines,
Mhm.
and also setting up new facilities.
Okay.
The backward integration we talked about, like the
Oh.
Karn Intertech acquisition, helps control the supply chain,
Mm.
and just ongoing stuff.
Mm.
Productivity improvements, streamlining the supply chain, digitization efforts across the board. It all adds up.
And what about their overall financial health? Are they carrying a lot of debt, for instance, especially with all these acquisitions and investments?
Actually, quite the opposite. SPRL is a net debt-free company.
Net debt-free, so cash exceeds debt.
That's right. Their cash and equivalents are more than their total debt. They've got a strong credit profile, recently upgraded to AA positive by India Ratings.
That's a strong rating.
It is.
Yeah.
And their financial performance has been consistently robust. Total income growing at 19% CAGR. That's compound annual growth rate.
Right.
And Patty, profit after tax, at a really staggering 54% CAGR from fiscal 21 to 25.
54% CAGR on profit.
Yeah. And their return on equity, ROE, was 21%. Return on capital employed, ROCE, at 27% in FY25. Strong indicators of profitability and really efficient use of capital.
Okay, financial, very sound. Now, it's becoming so important. Companies aren't just judged on financials anymore. What about sustainability, social responsibility, ESG? What's Shriram Pistons' story there?
They actually seem to have a really profound focus on sustainability. It covers the environmental, social, and governance ESG aspects pretty thoroughly. And it's getting noticed.
How so? What are they doing environmentally?
Okay, environmentally, they've got ISO 14001 certification. 3 of their plants have achieved zero liquid discharge status, ZLD.
ZLD, meaning
they treat and reuse all their wastewater. No liquid waste leaves the premises, which is a big deal.
it really is.
They've invested significantly in renewable energy, procuring substantial solar power, looks like over 30 megawatts total across their plants.
That's substantial.
And they have ambitious targets, too, like increasing their renewable energy mix by 20%, cutting Scope 1 and 2 emissions, that's direct and purchased energy emissions, by 20%, and being 200% water positive through rainwater harvesting.
200% water positive. Wow.
Yeah. Plus, promoting a circular economy, reusing scrap, recycling packaging.
Okay, that's comprehensive on the E. What about the S, the social side?
Socially, they really emphasize worker health and safety. They've got ISO 450N certification and, remarkably, a record of 0 lost time accidents at their plants.
0 LTAs is impressive.
It is. They're also focused on inclusion, gender diversity. They have women workers on the shop floor. And their CSR, corporate social responsibility efforts, seem quite expensive. Mobile medical vans, charitable dispensaries, a technical training center for students, self-defense training, even a project called SUSHACT, empowering women through entrepreneurship.
Okay, sounds like significant community investment.
Yeah.
And governance, the G.
On governance, they have a proper ESG steering committee, chaired by the MD and CEO, so top-level commitment, a robust ethics framework. And they received the Golden Peacock Award for good corporate governance.
Golden Peacock, right. That's prestigious.
It is. It signals strong governance practices.
So that is truly comprehensive across ES and G. Have these efforts actually been recognized externally? You mentioned getting noticed.
Absolutely. They received an ESG rating of 92 from Dun& Bradstreet.
-2, is that good?
It's actually the highest possible rating in India from D&B. So yes, very good.
Or the highest rating.
And they also picked up gold awards from ACMA, the Automotive Component Manufacturers Association of India, for both ESG and safety, plus numerous other accolades from customers and industry bodies. So yeah, their internal commitment is definitely translating into external recognition and trust.
Okay, so wrapping this all up, what does this really mean for you, our listener? What's the big takeaway here?
Well, what we've seen in this deep dive, I think, is a company that isn't just playing for, small incremental gains. Shriram Pistons and Rings is clearly a mature industry leader,
Hmm.
but they've effectively used their strong financial base, those long-standing partnerships, and that deep commitment to operational excellence to navigate a really dynamic market.
Right.
They're strategically diversifying their products, investing heavily in future mobility EVs, alternative fuels, while, crucially, also acknowledging and planning for the fact that traditional IC tech will likely remain relevant, especially in markets like India, for some time.
It's a very pragmatic, multi-pronged strategy.
Okay.
It really paints a picture of resilience, but also, yeah, forward thinking.
Which kind of leads to an important question, maybe for you to consider. Given SPRL's commitment to servicing that last ICE engine globally, while also investing heavily in cutting-edge EV and alternative fuel solutions, what fundamental shift do you anticipate will truly define the future of mobility in India over, say, the next decade?
Mm.
And how might that shift either challenge or maybe affirm SPRL's really multifaceted strategy?
That is definitely something to chew on. Thank you for joining us for this deep dive.